Welcome back. Here is our next case study number 36 from CA Final Audit MCQs and Case-Based Scenarios booklet issued by ICAI. You can download it from the Institute website. So let's start with the case study. Case study number 36. CAD was a practicing chartered accountant in Kolkata from last 15 years. He was appointed as a statutory auditor of Giant Motors Limited, a listed company, which was involved in the business of manufacturing of motor cars FY 2020-2021. CAD was appointed as a joint auditor along with CAP. They have divided the responsibility of conducting audit in accordance with SA 299. As the company has huge amount of property, plant and equipment, it was decided that all three auditors will verify the records relevant to property, plant and equipment. While forming an opinion, CAD was having a different opinion on property, plant and equipment, but CAT and CAP were having same opinion. CAD wants to qualify capitalization of post-acquisition cost incurred on machinery, whereas CAT and CAP were of the opinion that the treatment done by Giant Motor is correct. Both of them contended that as they are forming a majority, CAD will have to certify common audit report which is in accordance with the opinion of CAT and CAP. Okay, so here we do have an option in case of a joint auditor is not agreeing with the decision of other auditor, they can issue a separate report, right? So here CAD can issue a separate audit report even though he is appointed as a joint auditor. Then continuing further, while assessing the applicability of CARO 2020, CAD found that the issued share capital of Giant Motor Limited is 500 crore along with rupees 30 crore of calls which are being unpaid as they were receivable from retail investors. In the month of July 2020, Giant Motors Limited forfeited shares of worth 10 crores. There were no reserves and surplus as it was transferred to parent entity. Also, along with equity shares of rupees 300 crores, there was a preference share capital of 200 crores. CAT, while reporting under Clause 6 of CARO 2020, did not report anything under Clause 6 of CARO 2020 as the government has not ordered Giant Motor Limited to conduct cost audit for its books of accounts. Hence, CAT did not report anything under Clause 6. Giant Motors Limited had a total number of directors of 11 directors. Mr. Talent is the executive chairman of the company. Out of 11 directors, 5 were independent directors. So here, Giant Motor Limited is a listed company and moreover the name says it's a public company. Anyways, CARO is applicable to the company irrespective of any limits upon the maximum share capital and reserves and also the turnover. However, this question has been answered by ICAI considering Giant Motors Limited is a private company and will go with that answer only. And then see here CAT is of opinion that since the Giant Motor Limited is not required to maintain any cost reports because it is not being directed by the company, he is saying that he won't be reporting it under Clause 6 of CARO. However, even if anything is not applicable, auditor should give his opinion. He should clearly mention that Giant Motor is not required by the government to maintain cost reports. So it is not like he can avoid reporting, he need to report it. And the next thing over here is out of 11 directors, only 5 were independent directors. However, as per regulation 17 and 17A, you need to have a minimum of 50% of independent directors. So 50% of 11 is coming to somewhere around 5.5. Therefore, we'll round it off to the next highest figure, which is 6. Therefore, you need to have a minimum of 6 independent directors, right? So there is a non-compliance over here. Okay, then moving further, Mrs. D was not aware that CAD was a statutory auditor of Giant Motor Limited. She purchased shares of Giant Motor Limited worth rupees 1,50,000 book value on 3rd of October 2021. But when she came to know about the statutory auditor of Giant Motor Limited, she sold her shares on 10th of November 2021. One of the shareholders of Giant Motor Limited contended that CAD is disqualified and shall vacate his office of statutory auditor. So is this correct? Is the claim of the shareholder correct? No, because in case if any of the relatives of auditor is holding any significant or any interest in the said company, then a grace period of 60 days will be given to dispose of such securities and in the interest in the company in which the auditor is a statutory auditor. Therefore, since 3rd October 2021 is the date of purchase, from there you need to count 60 days. However, 10th of November 2021 is falling within that 60 days. Therefore, CAD is not required to vacate his office of statutory auditor in Giant Motor Limited. Let's go through each and every question now. On the basis of the above mentioned facts, you are required to answer the following MCQs. Question number 1. Can you please guide whether CAD really needs to go to with the opinion formed by CAT and CAP or not? No. He can give his own audit report, a separate audit report. Where is this mentioned? It is mentioned over here. See, come to the last line of point 6. So this particular thing is relating to joint auditors, wherein it is saying in case of disagreement, they can give their report separately. Who can give their report separately? Chartered accountants who have been appointed as joint auditors. We'll move 3 lines from below of point number 6, wherein it is stated that it is possible for SSC to appoint 2 or more chartered accountants as joint auditors for carrying out the tax audit or the statutory audit, whatever it might be, in which case the audit report will have to be signed by all the chartered accountants. In case of disagreement, they can give their report separately. Therefore, CAD can give his report separately without going by the majority, right? So option D, CAD can altogether issue a separate audit report and reference of other audit report issued by the majority should be made in the emphasis of matter paragraph. Therefore, option D is the correct. Option A, B, C are stating that he should go by the opinion, majority of the opinion. However, option B is saying that he can add a separate audit opinion, which is not correct. He can give a report separately, but not the audit opinion separately. Okay, so option D is the correct option. Let's go through the next question, question number 36.2. What should have been CAD's opinion on applicability of CARO 2020 for financial year 2021, assuming forfeited shares are not included in the equity share capital? See, this is where I said you that this question is being answered assuming that Giant Motor Limited is a private company, because applicability of CARO states that specifically exempts a private limited company, not point number 6, yeah, not being a subsidiary or a holding company of a public company, having a paid up capital and reserves and surplus not more than rupees 1 crore as on the balance sheet date, and which doesn't have borrowings. See, borrowings matter has not been given, so it is stating paid up share capital and reserves and surplus not more than 1 crore and which is a private limited company will be exempted. However, in the current case, Giant Motor Limited is a listed company, listed public company. Therefore, anyways, CARO is applicable to the company. However, this limit has been taken with the view that Giant Motor Limited is a private company. Therefore, CARO is applicable as the paid up share capital is more than 1 crore. So, assuming that Giant Motor Limited is a private limited company, in case if the amount of paid up share capital and reserves is more than 1 crore, then CARO is applicable. Now we'll decide whether paid up share capital is 480 crores or 280 crores. See, option B and option D are ruled out because the condition is it should be more than 1 crore. So option B and option D are saying it should be more than 10 crores. So they are ruled out. Now we need to find the correct answer from option A and option C, which is stating that the paid up share capital and reserves are more than 1 crore. Now we need to identify what is the amount, whether it is 480 crore or 280 crore. Now let's go back to the question. See, here it is given. CAD found that the issued share capital of Giant Motor Limited is 500 crore. Agreed? With 30 crore calls which are being unpaid. So we need only paid up share capital. So 500 minus 30, which is 470 crore paid up capital. And Giant Motor Limited forfeited shares worth 10 crores. So 10 crores should obviously go into reserves. Whereas it is saying that no reserves has been maintained because it is transferred to parent company. However, that belongs to this Giant Motor Limited only. Therefore, 500 minus 30 plus 10, which is coming to 480 crore. Paid up share capital includes equity share capital and the preference share capital. Therefore, we are ignoring the bifurcation given with respect to the share capital, which is 300 crore equity and 200 crore preference. So the answer is total issued capital 500 minus unpaid capital 30 plus forfeited share value, which is into reserves, 10. Therefore, the answer is 500 minus 30 plus 10, which is 480 crore. And 480 crore is more than 1 crore. Therefore, CARO 2020 is applicable to the company. Okay, giving a clear picture again. This question is being answered assuming Giant Motor Limited is a private limited company, because from going through the question we can easily identify that Giant Motor Limited is a listed public company. Anyways, CARO is applicable. However, from the given 4 options, it doesn't seem that there is any option which straightforward says since it's a listed public company, CARO 2020 is applicable. Correct? So the answer given by institute is in such a way that Giant Motor Limited is assumed as private limited company. So when it comes to private limited company, CARO exempts certain private limited companies whose paid up share capital and reserves are not exceeding 1 crore. So in case if any private limited companies paid up share capital and reserves exceeds 1 crore, then CARO is applicable. Therefore, in the current case, the paid up share capital and reserves amounting to 480 crore, which is exceeding 1 crore, therefore, CARO is applicable to the company, applicable to Giant Motor Limited. Hope you are all clear. 480 crore is calculated. See, 500 crore of total issued capital minus 30 crores of unpaid share capital plus 10 crores of forfeited shares. Forfeited share value will obviously go into reserves and surplus. Therefore, 500 minus 30 plus 10, which is coming to 480 crore, which is more than 1 crore. Therefore, CARO 2020 is applicable to the company. Hope this is clear. In fact, in my viewpoint, this question is ultimate rubbish because public listed company is applicable. CARO is applicable to it, irrespective of these things, right? And then, therefore, option A is the correct option. Then moving forward, was the approach followed by CAT for not reporting under clause 6 of CARO 2020 correct? No. We need to report it, right? So, therefore, he need to report whether it is applicable or not applicable. Therefore, the action taken by CAT is not correct. So, option C says no. Clause 6 should be reported irrespective of whether Giant Motor Limited has been ordered to conduct cost audit by the central government or not. Therefore, option C is the correct option. Option A and option B are saying CAT is correct, which is not the one. And option D says no, should be reported only if there is any discrepancy found. Even that is not correct. Whether you find discrepancy or whether you doesn't find any discrepancy, you need to report it under clause 6. And moreover, it should be reported irrespective of whether Jain Motor Limited is ordered by the government to conduct cost audit. Therefore, option C is the correct option. Moving forward, question 36.4. Was there any non-compliance on part of Jain Motor Limited in case of appointment of independent directors? Yes, there is a non-compliance because as per regulation 17 and 17A, there should be at least 50%. See, going to the first point, the auditor should ascertain whether throughout the reporting period, the board of directors comprises an optimum combination of executive and non-executive directors with at least one woman director and not less than 50% of board of directors comprising non-executive directors. It may be noted that the board of directors of top 1000 listed companies should have at least one independent woman directors. Therefore, 50% of board of directors should be a non-executive directors. 1 minute. Yeah, here you go. So there is a non-compliance. So out of 11, there should be at least 50%, which is 6. So at least 6 or more independent directors has to be there. Therefore, option B, yes, there was a non-compliance as there should be more than 6 independent directors specified in regulations 17 and 17A. Therefore, option B is the correct option. Right? See, option D is also saying yes. Yes, there was a non-compliance as all the directors should have been independent except the chairman of a company, which is not correct. So option B is the correct option. Option A and option C is saying there is no non-compliance, which is not the correct answer. And then moving on, the next question was the contention of shareholder that CAD should vacate the office of statutory auditor correct? No. If Mrs. D sold her shares within a grace period of 30 days. So option A is the correct option, but still I'll take you through this. See, the following points may be noted in this regard. Go through point number 3. Grace period of 60 days for corrective action should apply only in respect of securities held by relatives. This would not apply to auditor or his partner. Therefore, within a period of 60 days, if Mrs. D is able to sell off her shares, then he should not vacate his office of statutory auditor. Therefore, option A is the correct option. Option C and options D are saying he should vacate, and option B is saying no, as the book value is less than 2 lakhs, which is not the option. Like in case of securities held by relatives, it should be sold off within grace period of 60 days. It's not just the monetary value. Therefore, with that, we have completed case study number 36. Hope these videos are helpful to you. Please do like, share, and subscribe. Do share with your friends in need. Catch you soon in case study number 37. Thanks for watching.